Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. What is the best age to buy long-term care insurance? Well, before I answer that question, I'm going to ask you a different question. What is the best age to buy life insurance? Well, the answer to that question is 1 month before you die. This way, you'd pay a small premium, and then your beneficiaries would receive a big chunk of money. There's only one problem with that strategy. We don't know when we're going to die. We don't even know when we might become uninsurable and can't even purchase life insurance. It's the same with long-term care insurance. Everyone can agree that the best time to buy a long-term care policy is 1 month before you need long-term care. That way you would only pay one small premium, and then you would receive benefit payments from the insurance company for many years to come. Unfortunately, we don't know when we're going to need long-term care. Some people will never need care. Others won't need care until their 80s or 90s. Some will need care in their 60s or might even need care in their 50s or even younger. We've all seen the financial experts on the internet. Some say you should buy long-term care insurance before you turn 50. Or others say, well, age 59 is the perfect time, or age 65. How could so many experts be so confused? Here's a simple solution. Since long-term care insurance is designed to protect income and assets, it makes sense to use a financial algorithm, not an age algorithm or not a health algorithm, to determine the best time to purchase long-term care insurance. Let me clarify. There are some 45-year-olds who should buy long-term care insurance, but there are some 65-year-olds who should not. In fact, about half of retirees should not buy long-term care insurance. Why? Because they could easily qualify for Medicaid-funded long-term care. If someone's likely to qualify for Medicaid, it doesn't make sense for them to buy a private long-term care insurance policy. Now, let me give you some real-world examples. If you're single and you're retired and your income is under $50,000 per year and your net worth is under $100,000, you probably should not buy long-term care insurance. Why? Because Medicaid will cover your long-term care costs once you spend down your assets to meet the eligibility requirements. Now, that doesn't mean you shouldn't do any planning. You may still want to do some planning, maybe with an inexpensive recovery policy that could pay maybe 6 months of care or 12 months of care. That could help you avoid some of the long waiting lists that are often associated with Medicaid. Scenario 2, if you're married and you're retired with modest assets, let's say, for example, your household income is under $50,000 per year and your household net worth is under $200,000. Well, it's probably not worth buying long-term care insurance. Medicaid is likely to cover one or both spouses eventually. Again, this is a situation where you might want to buy a recovery policy for the spouse with the higher income. This can help bridge the gap before Medicaid kicks in and avoid being stuck on some long waiting lists. Now, what if you're still working and you haven't retired yet? You have other financial priorities. If you're not yet retired, you probably shouldn't even think about long-term care insurance unless you've checked off these higher financial priorities. For example, excellent medical insurance, okay, and being able to max out your health savings account or your flexible spending account. Also, with long-term disability insurance, that's critically important. You've got to have that to be able to replace your income should something happen where you can't work anymore. Also, make sure you have adequate term life insurance to support your dependents, anyone who's dependent upon you. If you were to die prematurely, you need term life insurance in order to replace your income so that it can take care of your dependents. You need to have all of your high interest debt paid off and at least 6 to 12 months of living expenses saved up in a savings account. And lastly, make sure you're maximizing your retirement account contributions every year. Now, once all those boxes are checked, once you've taken care of all those higher financial priorities, then look into long-term care insurance, not before. There might be one exception, though. If you live in a state that is considering a long-term care payroll tax. If you live in a state like New York, California, they're considering a payroll tax to fund a government-run long-term care program. And if you earn above average income, consider purchasing a small long-term care insurance policy. This could help you opt out of a payroll tax and ensure you have some level of private long-term care insurance. The bottom line is this: long-term care insurance isn't for everyone. For many retirees with modest assets and income, Medicaid will be the primary payer for your care. But that doesn't mean you should skip planning altogether. A small recovery policy or simply understanding Medicaid eligibility rules can help you avoid delays in accessing care. Long-term care planning is about protecting your loved ones from the physical, emotional, and financial stress of needing long-term care. So the best time to buy long-term care insurance is when you're financially ready for it. It's not about age, not about health. Even if you buy a long-term care insurance policy at a younger age and you have to pay premium for a longer amount of time, you still pay less the younger you are when you buy a policy.